What is going on, ladies and gentlemen? Welcome to October 21st, 2019. And here we have it. We have had a very crazy week, and we're in for an even crazier month, I think. And I think some of the futures, some of the earnings reports, all that is starting to prove it. So, you know, let's get right into it. Now, one of the bigger things that I've been saying for some time now is that it is possible that the market is going to be rallying, and I still full heartedly believe it. And I think, especially due to how these earnings are going so far, we haven't had that many today. There was a slight gap up in the morning, and then um, we are seeing that how some of these stocks are moving. We saw this big gap up in the morning, right there. So we are doing well. We did break up above 3,000, which is kind of cool. Now, what's important is why it's kind of acting this way, and it's a little bit obvious for the most part. These earnings are what are holding up the market in the way that it is, and that makes actually a lot of sense. Like going into this, the way that we were looking at Amazon earlier at an earlier point when we were saying, okay, hey, the TTM is turning red. There's a squeeze coming. Probably it's going to come down and then it's going to come back up around. It wasn't too far out of the reason to say, if you think about it on a fundamental level, in that, hey, we're getting these earnings reports, we're getting all these pieces of information, which are slowly going to, elucidate what's going on in the market. Now, I am starting to more full-heartedly believe that, the market is coming up. It seriously is coming up. I think that we could go past like well into 305s, and then we'll see, where we go. But I think we obviously are reapproaching all-time highs. So this is all well and good, but I think at the same time this was very predictable, and that you could have done something about this. Now, I mean, you live and you learn in that regard, but that is still, I think, the reality of this, and there still is time to be done something about this. Now, I think one of the things that's really, really interesting to me is you can take a look at all basically the indices, right? So you see the SPY came down, came up, and this is all reactive for all stocks. We got some high volatility, low movement back in the September region and August region, and then after that, we started seeing. Oh, sorry, I apologize. This is the August region. This is the September region, and now we're in October. We're seeing a lot of volatility. We're seeing some movements, and now I did say earlier that we're getting. This is around the time where we see quite a bit of movement, not a lot of change, and for at some level that is kind of holding to be slightly true. We're holding around in the same general area. We're at 299. We started around 295 when the month kind of started. So we are seeing, some jumping around and stuff like that, but it is definitely taking a direction. And I do like actually the way that this is running. This is something that we could have anticipated, at least to some extent. Now, like I said earlier, the TTM isn't exactly an indicator that you want to put 100% of your trust into, but it does look like it's working out. And it does seem like, this didn't necessarily predict anything, but it is something that you can count on with the right fundamentals. Now, I'm going to stop drolling about that, and I want to talk about what's going on right now. So, a few days ago, or actually Friday, the entire market had come down. And the entire market had come down because of two stocks. Those two stocks were Boeing and J&J. So we'll get into both of those. So Boeing actually had come down over 10% that day, and then came down an additional I want to say 5%, 6% over the course of that, and then kind of recovered. It's recouping now. So when with these very high volatile, high momentum plays, you can kind of swing around and play those opposite sides. I haven't done that yet because I'm still trying to get a read on the market right now. But this either way does start to give you kind of an idea of what's going on. And if you look over to this left, you can look at this, or if you even look at the heat map for how today went, we saw a ton of green today, and that is expected, despite the fact that Boeing and J&J are down. Now Boeing is down because the CEO has been, I can't say indicted, but he knew about the information regarding the 737 Max crashes for a while now, and so that information was released recently. And then I mean, what I think that means, though, fundamentally speaking, is it's either A, not a big deal, or B, a very big deal. And I realize that doesn't really give you a lot of place to move, but think about it this way. Now, the FAA is demanding full transparency from Boeing, and that's fine. That's actually a very good thing. That is, for stockholders and for the market in general, it's a very good thing. They don't like the idea of there being some sort of uncertainty. We don't know what to expect, though. And I think that's an issue, is if there is anything else hiding, they're going to find it. However, if there is no reason to believe that there's anything else being hidden, then there is no reason to believe that the market will be coming down anymore. And that is what I want to think about in this regard. I want to think that, hey, okay, so this isn't a terrible thing that happened. And the fact that the CEO knew, while it's a terrible thing morally speaking, what does that mean for the reality of it? This is something back over 2 years ago, 2016. So what does that mean for now? Now, that does mean several things. That means that there's going to be intense pressure on the CEO of Boeing for the months to come, especially as subpoenas start getting handed around and things of that nature. But I think what this like, and that's what I mean. Actually, I mean if there becomes an intense involvement, we're going to see the pressure in the stock. However, if there is none, then I think we could see a complete return, or at least maybe a partial return. And that either way, that is something that you can look for and start to do something about. Now, like I said, am not going to be playing Boeing just yet. I need to weed out exactly what's going on with this. I think that they're due for coming up, but we're going to have to wait and see. So, this news is either very bad or very worthless, and the market overreacted, which it has a tendency to do. Now, there is another thing. J&J. J&J is very what J&J did is actually extremely interesting to me, because they just had earnings. They had earnings on, what day is this? This is the 14th. So they had earnings on this day, and as a result, they had a run up, and then once they reached their high, I cannot say it's their all time high. I can't even say it's close, can I? But it is once they reached one of their highs, their higher points. They beat above the SMAs. They ended up intentionally, deliberately doing a callback on all of their talcum powder products. Okay, now this in tandem with Boeing is what brought the market down. What this means for J&J though is kind of a little bit more nuanced. I think that you have to consider that they didn't randomly decide that this is the day that they released that information. They thought about it. They put some thought into saying, okay, here's what's going on this day. We know how our earnings looks. We know how our projections look. We know that this is what's going on here, and we know what's going to happen. With these pieces of information in mind, I think the way that they acted on this was deliberate. And I think that the idea of it was they were anticipating that with this in mind, with this piece of news in mind, that the stock would move once again in their favor. They don't maybe they I don't think that they anticipate a long period of running down. I think they are expecting a return fairly soon. So that is my 2 cents when it comes to this, and I think I'll have to keep watching it in order to make a seriously concise decision about this. I do think that the fact that it's even holding at this level, which was a level, if you look back at the all-time charts, you can see that it is holding at this level repeatedly, and I think the analysts at J&J knew that. I think a lot of people knew that. I think the stock market knew that, and so you can actually take that information. You can take this information and you can nullify it using this information, and you can say, okay, hey, they beat earnings by this amount. They beat it pretty good or pretty well, and then their guidance was also well done. And so all of that news was enough to bring it back, and then they had to undo it in order to take action on that sort of thing. Now the reason it came down was obviously an expectation. Oh, hey, there's going to be a quarterly loss this time. Their earnings is going to be bad, whatever it is. But if their guidance is high enough, then you can kind of anticipate that you probably might get a run up. Now that's something to consider. That's not something to believe full-heartedly. But that is my 2 cents here, like I said. Now, that is important to think about. Now, I want you to think about the rest of the market right now. What's really interesting is Apple is at an all-time high. And if you look at my notes, you can actually see that we are expecting Apple to continue upwards, maybe stall around 240, but then keep going. Yes, these are all-time highs. Yes, this is kind of scary. Yes, this is uncharted territory. However, a lot of people avoided and missed this massive AMD 100% move from $15 to $31. And then it tanked down because of something else from INTC. But it doesn't matter. What matters is when these things are making new highs and you're not in them, that is an issue. That is a big, big issue. You can't time this. It's not possible. But it doesn't matter because you just need to watch why it's doing this. Why is there a run up? Why is this happening? Yes, there's a very obvious reason as to why this is happening. One, the market. Two, they perform well, and there are actually like some more nuanced reasons. The how they're getting affected by China, how they're getting affected by these deals, how they're being influenced by different countries, and what power they have over those are actually kind of important because at some level you are investing with a multi trillion dollar organization that has holds here and here, and if they're capable of producing their own income under certain ways, then they have revenue growth, and that's an idea to sit on. But at the end of the day, the market is coming up, everything is coming up, SPY is coming up, these tech stocks are coming up, and that's important to see. I mean, we are seeing Google return to its all-time highs again. Not it's still got a bit of ways to go actually for as far as Google is concerned, but it is approaching the all-time highs within the last you know several months, I guess, if I have to really say. Um, but we have crossed over that area where it had dropped from the earnings report. So this earnings was really good. It brought it back up. So now that's just something to consider as far as Google is concerned. But I'm just saying in general that the market is coming up, and there is an expectation for a rally, assuming that these earnings do go well. However, I want to note that Amazon is not behaving in that way. Amazon is not Amazon is not near all-time highs whatsoever. And this is actually something I expected. And it wasn't like I'm not predicting it or anything. It's just how I was predicting Amazon to be considered. Now, what this means is the downward run here was a lot stronger for for Amazon, and then as it starts to kind of recuperate around this area and start to come back into full swing, it still hasn't found that momentum, so to speak. So, and if you actually, what's funny is if you look at this again, is you'll see the TTM has turned red once again on this trend. So we'll see actually how this goes. However, I am, and also once again, Amazon is reporting this week. Cat is also reporting this week. So this is kind of interesting for me to look at, but I do think it's possible for Amazon to, in the midst of this rally, to come back to all-time highs before the market really does come back down to a low and maybe start fully contracting for a while now. Now, why do I think it's going to rally? I mean, there's a lot of reasons. I think that the ER seasons are very good, especially since it's Q3, which is not historically the greatest, but it doesn't matter in that regard. What matters is what's going on right now, and the market is taking it as good news, and that's kind of interesting to say the least because now we're getting all this price action, we're getting all this movement, we're getting all this data, and the market kind of knows. It already has a sense. We're seeing all these stocks rally up, except Amazon isn't, not in the same way, and that I want to play. And I think what I'm probably going to do, and this might be just a bit of a YOLO on my part, but I think I may just place a naked call on this stock, probably to like 1820, 1830, and just see where that runs because they have an earnings, and I do want to play it. And maybe I'll play the earnings and then cut out once they take it. Their volatility, their IV is going to be pretty high, and then if it comes back down, they're going to get crushed. So you could play the IV crush, you could sell those. Um, I think what I'm going to do is I'm gonna keep an eye on it. I'm going to see what the price action looks like tomorrow. But I think it's possible that Amazon's going to run up into its earnings, and then following, it's going to take off after its earnings and then come back down, or maybe even keep going. And those are the things that I kind of want to watch out for. I do find it peculiar that SPY is back, Apple is back, Google's kind of back. These stocks are coming back. Even AMD is back. AMD is back at nearing all-time highs. All of these stocks are back. Why isn't this stock? And that's the thing to pay attention to, is why are these stocks kind of doing it? And some of these stocks are divergent. Amazon's not the only one, but it's important to see which stocks they are and why they're doing that exact thing. And so that Amazon is my biggest thing. The biggest reason actually I'm actually looking at Amazon this closely is because it's it's on as far as the market caps, it's one of the biggest, right? It's ranked in the top 10. And it's actually ranked in the top 3, but that is the reason that I'm looking at this stock this way. So I will keep an eye on how this goes. I do have an inkling that it might actually start to push really hard very soon, especially from all this resistance that it's been facing up until now. I think that it's going to face what I'm going to call a type of acceptance, in that the market is probably going to come up, and Amazon's going to decide, all right, it's time, and it'll probably go with it, I think. But this could also completely work out in the opposite direction. I will obviously have to wait and see, and then my plays will kind of determine what my final thoughts on anything are. But I think, like I said, watch that. Amazon's got an ER coming. Cat is reporting as well this week. Very soon. I got a lot of shit here, but you can look at this. We've got a lot of these valleys kind of going on. Cat is very interesting because it's very technical and it plays very technical. Um, with this earning coming up, I think that we're either going to see, we're probably going to see quite a big run up, up to this one. We're not going to see it. It's not going to be huge, but you can look at what the expected move is. If you look at the IV for some of these things, it'll get you the implied volatility, but what you want to get is the expected move. So figure out what that expected move is, and then play that accordingly. Um, yeah, but I think Cat is going to probably be especially because of how we're playing into earnings and how we're kind of tapering off right now. I think we're going to catch some momentum again, once again in the upward direction, probably all the way up to, what are we at, 132 right now. We might catch it up to about 137. That is what I'd be in the expected move. So it won't be huge. I don't think Cat's going to be the huge market cap stock here that we're looking for, but I think it's definitely up there. Um, I'll probably do like a list of plays that I'm seriously considering right now. I'm just getting a market reading, so to speak. So that is what I'm doing at the moment. So now, not me, but my partner is looking at. He wants to do Home Depot. So he wants to do an HD credit spread once it breaks a specific high. So the high is, or the specific low. So after it breaks 236, he's thinking that it's probably going to start coming back down. And so I actually kind of agree with him, just on a technical standpoint. It is possible. I will have to kind of take a look at this a little bit more carefully, but it does actually seem that. I mean, HD is at all time highs, and so in this market rally, it is important to see how it reacts during the market rallies as well. For example, when the market came down a few days ago on Friday, it didn't come down, so it's not exactly fully tied together with the market. So it does behave on its own thing, and the reason it does that because it is actually considered as some of these what do you call it? These value stocks. So value stocks kind of behave in a different way. They hold value when the market doesn't. Those types of things. They're things that are constantly making money regardless of whether or not the market is doing well. McDonald's is another one of those value stocks. It is starting to kind of recuperate up here, and I want to see some consolidation above these 210 levels if we want to see it go back into an uptrend. McDonald's used to be a market cap or a value stock. It doesn't really behave like one as much anymore. But regardless, McDonald's is reporting, so you want to pay attention to that as well. I think it's going to be positive. Like I said, I think I'm very bullish on the market overall right now, but not for long. And the reason I'm not for long is actually because the futures are pricing in a 91.9% chance of a rate cut, which is very, 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 very big. I mean, and this is kind of interesting too because we're only about 10 days away from the no, I'm sorry, they're meeting on the 30th, so we're only about 9 days away, and 8 after tomorrow, so almost a week, only about a week away from a rate cut happening, and the futures are pricing it in very strongly, and this there are several reasons behind this. I think half of it is the market rally is a good thing, but it's also understood to be a very short term uh, position. It's a short term ideology right now as far as the market goes. So there is no real thinking that, oh, this is going to be a long run up for the market right now. Sorry. And so that's kind of important to me. I think is that with this in mind, we're seeing these probabilities. We're seeing that, hey, that the market is still not actually in a great place. So this rally is not to say artificial, but it is not necessarily going to hold up for long. And with that, I'm going to start playing that reversal actually very strongly too. But as we get into that, so we're not there yet, and we're not going to be there for a little while. We got a little bit. We got a little bit of time to enjoy. I think what I think is probably our final rally before we really start to come down. And we can watch that too as the market really starts to come back up into new highs. We do see that the yuan is kind of holding its ground. We still haven't really got much news regarding the currency deals and stuff like that. So that's stuff that's still being worked out, but you can keep an eye on it. As for how the market's performing in general, we got quite a bit of movement. I guess it's not really. I mean, 57 points on the Dow Jones is not really much at all. The Nasdaq's up 73, SPY is up 20. So it's not. So these aren't. This isn't very many points as far as the indices are concerned. One thing I did want to point out actually is if you look at the intraday chart. So say we look at Facebook, and this is why I really like Amazon right now, is because Facebook came up, and then Apple. I did not spell that right. Apple came up, and so these are all stocks. These came up about 1.6%. Facebook came up about 1.5. However, Amazon, while also making the same move, did not move at the same amount, and you can see that. Hold on a second. There we go. We only moved about 0.9%, so almost less than a percent that we moved on Amazon, and that's good. I really do like that pricing. That means it's cheap, but expecting a move. So I want to see. I said that 3 times. I want to see it hold 1783.80. 1780 probably is where I want to see it hold. I want to see it come down a little bit and then bounce up, and I think at that point I'll end up actually buying naked calls for this week or maybe next week even, and hold that out to the next week. So that is probably what I'm going to do there. This is what we were talking about last week, and I do want to kind of get into that really quickly. I did say the SPY was coming down to volatility. It did for a little while until the rally started really kicking in. When the earnings started coming out, Roku broke way the hell down at that point. It hit 133, but then I think it fully bounced up and around it. Oh, we did break below 133 though at one point. So those did end up happening. I didn't get a chance to relook at those. What I'm currently in, and my UNH, I don't know if I don't think I covered it, but my UNH ended up expiring in the money in the most miraculous way possible. However, I sold a little bit beforehand anyway. But let's look at Friday. So right here. So once we hit this point, we actually started breaking into the 245s, which is where I started to lose money on this position, and then we came all the way back down to 241, came out, came back down, and then pretty much right after 11 o'clock, UNH faced a complete run up, but I was out already before this happened. So this was actually a good play in terms of value, fundamentals, but it also wasn't great as far as risk is concerned. If I'd held it, I would have lost money on this position probably. So that is also something I want to think about as I start taking on some of these. How much risk do you want to take on, right? You need to figure out the percent collateral to win that you want to take on for some of these plays, and how you determine that is actually quite important. So another thing that we're playing is UAL. UAL, I said as we broke into the 90 levels, that it'll probably come back down after finding some sort of target, some roof, and that it gapped up quite a bit actually in the morning, and that's due to the market. And I do like the fact that it came down, despite the fact that the market continued to rally upward. And with that, I think I am currently in UAL credit spreads. I would want to probably double or triple up into these positions to maximize my percentage gain back. So these are the kinds of things that I'm looking into. I don't necessarily have an idea as for how I'm going to play this earnings week. This is going to be a big week, and I am looking forward to it. But I need to see, because Monday we didn't really have any earnings. Our earnings are tomorrow and Wednesday. That's where we're seeing Amazon and Apple Amazon start to kick in. Apple is on the 30th, 29th. So that's what we'll watch there. But as for some of these, I think keep an eye on how the stocks are holding at their current levels. You'll see probably the market will come up and the stocks will come up. Keep an eye on what's following and isn't following the market. Those types of things. Like I said, I'll probably end up taking Amazon calls just straight. He also said that I think ILMN is a gap fill because their earnings is tomorrow. So ILMN. So if you look at the, yeah, there it is. Yeah, so their earnings is tomorrow. It's got a huge area of space to fill in. Obviously, the market doesn't like gaps, and these types of things aren't normal. These aren't. It's not going to fill this. Uh, I'm dubious that it's going to fill it. It'd be interesting to see that it does though. Um, you if it happens, then that would be very interesting. I'm doubtful. I think we'll probably catch if we do catch a very high expected move, and that's what you want to watch. The expected moves you will see it, come up to around these SMA levels, hit about an extra $15. So that would only be about, I don't know, maybe 10%, a little bit less, 5% moves out of these things. But we'll actually have to see how that goes. Those are very easy plays if you can find them like that. So keep an eye on ILMN. Like I said, I'm in UAL puts or credit spreads. I am considering actually taking naked puts as well. I think another risk, however, as far as UAL is concerned, is that it'll probably kind of bounce around that area for a while. So maybe an iron condor there. This is great weather for iron condors. So figure out what those are. For example, Amazon earnings. If Amazon takes way the hell up, and then you actually have an iron condor prior to, if you can figure out a proper range for the expected move and then the expected drop back, you can actually land in the money, or out of the money, so to speak, in terms of the iron condor positions, and you can actually create a pretty reasonable return on those. Like, you can get back the entirety of it with less collateral as well. So those are also things that you want to kind of look into. Beyond is continuing an downward break, and Apple's, like I said, continuing an upward break, and then Baba as well is continuing whatever trend it's kind of been on, kind of a downward. Actually, I don't know. Baba's kind of interesting. It kind of flipped around on us on this day, just kind of like the whole market. So Baba is one of those stocks that are just completely following the market. So I wouldn't necessarily take any divergence from some of these stocks. The ones that I am expecting, that I am truly seeing divergence from, is Amazon as of this moment, Amazon and Google. So keep an eye on those stocks, and then we'll see how those actually kind of work out for us. Yeah, and then I'll probably this following video, I am a lot of these videos are for someone and for some people, and so I'm actually going to make in my next video an explanation of why price action more or less dominates all and why everything else is kind of subsequent to it. All right, thanks, guys.